Alright, people, what's going on, guys? It's your boy Curbs. Today is August 27th. Currently end of the month. Kind of hectic the past few days trading. I mean, for me at least. But in this video, we're going to be focusing on liquidity, support and resistance, and how to find a trend, basically. This is just for entertainment purposes only. I'm not telling you to invest or anything in a stock. So just as a disclaimer, it's just for entertainment purpose only, or you can use this as your educational anything. But this is my opinion of how I see the markets, not anyone else. And this is how I look at the markets every single day. And if you guys are confused why there's so many lines and just literally just lines and trend lines, it's because this is how I trade. All right, so basically, let's do a trend first. So a market, you can only see the market in three ways. We have this as bullish momentum or bullish sentiment. Call it bullish sentiment. This is a bearish sentiment. And we got consolidation right here, where it just stays the same, doesn't break any level, or doesn't go up or anything. So basically, a bullish sentiment is a price that forms a higher high, a higher low, and then it breaks the previous higher high right here. Why? Because the price leaves a body above this higher high, and it just keeps doing a higher high. If it keeps breaking a higher high, that means we are bullish. Sorry about that. We're bullish, right? So if we keep breaking structure to the upside, we are bullish. Break. You gotta make sure when it breaks, the body is breaking the touch point or the higher high. It shouldn't be the wick, because if it's a wick, I mean, it depends. If it's in a higher time frame, if it's a wick, it can be a breaker structure. But breaker structure is a body close above a high or above a low. Okay? So same thing for bearish momentum or bearish sentiment. It keeps breaking lows. A higher low, lower low, lower high, then lower low. It keeps breaking a lower low, and it keeps that momentum to the downside. But whereas in consolidation, it does not break anything. It just stays in one spot. It just stays on a level. And this plays a big part in our strategy, because it does not, like, this is our pretty much our indication to see if it's gonna go to the upside or it's gonna go to the downside. All right. Wait up, I gotta make sure this is recording. Swear. Hello. All right. Program C. Okay. So this is higher high. This is a bullish momentum. Bullish sentiment, whatever. You can call it anything. Bullish sentiment. Bearish sentiment. And then we got consolidation. This is how you should only see the market. And as easy as this information as it gets, this is all you need really to understand what market structure is. Basically, bullish sentiment, it just keeps breaking highs. Bearish sentiment, it just keeps breaking lows. And consolidation, it doesn't even break anything. So it just, majority of the time, you'll see wicks on this. So you just see wicks, like body, wicks, body, and wicks. That's what consolidation is. It doesn't go anywhere. And the thing is, the market is fractal, so you can see this in the 4-hour, daily, 3-hour, 2-hour, H1, 30-minute, until to that 1-minute time frame. You don't need to see this. It's all the same, but understanding how the body moves, like the candle moves, is very, very vital, because the way a 4-hour moves, let's say a 4-hour candle moves, there's little candles inside of the 4-hour, and that's what you need to understand. So like, I believe in the saying where higher time frame holds higher power, or is that does that make sense? I think so. Higher time frame holds higher power, because you can clearly see the movement of a bearish candle. Look at this. 1 4-hour bearish candle. You can literally see an engulfing, and you can pull up a trade on a bearish candle like this. You know, you can literally swing this. Boom. You get yourself a 1 to 3 on a 4-hour. Like that. But obviously you need like other confirmations to to check and to have before you even, start doing that. But if you drop them to 3 hours in a 4-hour candle, just focus on this candle right here. If in a 3-hour candle, you see how much candles inside of the 4-hour. So like 1, 2, we got 3-hour. So we only got equivalent to 2 hours. We got 1, 2, 3. 1, 2, 3, 4. We got 4 candles. Wait up. Oh yeah, no. In 2 hours, we got 2 candles. That's equivalent to 1 4-hour candle, right? So that's what I mean by fractals. But let's focus on the market structure and how we can actually see this type of market structure to the actual market. As we can see, look at this. Our current market is bearish. Look, this is MNQ. Our current market is bearish. Why? We got a higher high that changed it to a lower low, and then we went back on a higher lower high. And why did we see it bearish? Why is it bearish now? Because we broke structure over here. We can call it a BOS right there. But what I do with that is I can look at it as my support, my main support. Because on a higher time frame, it's a major support that just got broken. All right. Actually, let's remove all this drawing. All right. So this support right here, it's a major one. Why? Because we got higher time frame consolidation, or higher time frame low being broken and making a new low, and then eventually looking forward to create another bearish sentiment, creates a lower high, then lower low again. Why? Because the body is breaking the support. See? That's it. So that's pretty much how you see the bearish sentiment on Whereas on let's see this. In a bullish sentiment now, we got higher high. No. Got higher low. We got higher high. Higher low. Higher high. This might be a higher low. Most likely consolidation. A higher high right here. Higher low. Higher high. Boom. And then we got a big drop again. See what I mean? Alright. You guys pretty much know what market structure is. It's just basically higher highs and higher lows. That's it. It's not too complicated. All you need to see is the higher time frame. The better it is. The more visible it is in the higher time frame, the major the levels are basically. If you can see a higher high and higher lows on the higher time frame, you can use that support and resistance basically. Cause let's say this is a higher high, right? Higher high. We got our higher low right here. You can use this as resistance, because if you know it breaks, once it breaks, you know it's a major key level, because now that becomes a resistance once it breaks. And once it comes back down, and you can pretty much target that as your key level. Alright, it's getting a little bit more advanced, but let's say you have a trade right here. We got higher high, higher low, higher high, another higher high over here. We got higher low. This higher low can be your support now. And let's say you're in the current market and you're looking for a trade over here. You can definitely aim for the next resistance right here. You can aim for a 1 to 2. You see, once it breaks support on a higher time frame, you can now use that as your indication to make a trade, place a trade. All right, that's pretty much how you can use support and resistance. But if you want to scalp, that's completely the same thing. But we're gonna be using 5 minutes and 15 minutes, right? So support and resistance is just, can you get as many touch points of the higher highs and higher lows? You know what I mean? So support and resistance is just looking at the higher time frames, mainly on the 1 hour. If you want to scalp, I just usually do 1 hour or 30 minutes, right? So look at your bias as if like you're basically looking at your sentiment. What's your sentiment? Let's say over here we got this looks like a consolidation, but like we got a lower low, no, a lower high, no, it's a higher low, higher high, higher low, higher high, higher low. You see this touch points right here, this higher high, higher low, higher low, higher high, higher low. This can be your resistance. Higher high can be your resistance, and you can now find connection to the other side, and find it to your left, basically, right? See your high right here. This is your high. You can now put this as your key level right here, because we got as many touch points. We got higher high, we got another touch point right here, we got another consolidation that touched it, which means like the price is going back to this zone most of the time. right? We got another touch point over here. If we look at the left side, we have another touch point over here. We got lower low. You see what I mean? Like, it pretty much is saying that, look, it's a major touch point because it's a major key level because of the touch points we have. It's consolidating, or it's making a major higher high or a major higher low. That's how I determine pretty much my support and resistance. Like, it can go vice versa. Support is just at the bottom, but like, it can be, let's say this is my resistance, right? This outlook right now, this is a resistance because we are breaking to the top and we are putting a resistance to our higher high. You see, we break over here. It is about a valid resistance. We can also put our support over here because why? We got touch point over here and it's a lower low. This is indicating a lower low, so basically we can put it over here. That's our support. But it can be vice versa and can be connected. Like, so this resistance can be a support over here because it was a touch point and we saw it break below, which means it's a support that got broken and the price went down. And once it went back up to this price and this touch point, let's say over here, it touched this zone and look what happened. It made a sell-off. You see what I mean? And if you look at to the left and extend it right here on a previous data or a previous market, you made a higher high, sell off, and once it breaks this high right here, or this once it breaks the key level, it pretty much it broke through and bought up. You see, bought up to pretty much the next key level of resistance. You see? Alright, how do you find liquidity? That's pretty much easy. Finding liquidity is basically your higher highs and higher lows. That's it. You know what I mean? There's nothing, like, pretty much everything is liquidity. Like, every candle is money, which means it's liquidity. The most liquidity can be, like, the obvious liquidities are, you know, the equal lows. Let's say equal lows or equal highs. Let's say equal highs are here. It's not even equal highs. My bad. Bad demonstration. Where can I find equal highs? Gotta look at 30 minutes. Equal highs. Okay. Really gotta look at the 1 minute. Alright. Over here, we got equal highs. Higher highs and higher lows can be liquidity. That's first indication. Or equal highs are here. Equal highs get liquidated, and then what happened? Sell off. So you, like, once equal highs form, it will get liquidated if it's like close to the timing in the market open, or you know, it's just a session with volume. It usually just gets liquidated and go to the opposite side, right? So let's say higher highs, higher low, higher high, higher low, higher high. our sessions comes in. Where can we see liquidity? All of this is liquidity right here. Pretty much your higher highs and higher lows are liquidity, you know? And the ones that becomes like a trend line can be called, let's say a trend line like that. It can be called, I usually call it like low resistance liquidity, because if I see a trend line and I'm pretty much on the session and I'm aiming for a short position and I see a trend line, that pretty much is telling me that, look, we got a low resistance liquidity. That means that it's pretty much money. Like, imagine all of these are money. Cha-ching, cha-ching, cha-ching. That's why it's low resistance, because nothing is stopping price to just sell off like crazy, because it's making a trend line. It's just full of money. That's basically what it means. See how far this sell off was? Because it's full of money all the way. Pretty much all of this trend right here, full of money, just liquidated, just like that. Crazy, right? That's what liquidity is. It's just higher highs and higher lows. Can you find the closest liquidity? Usually, like when I aim for 1 to 2s, I just find the closest low or closest high. That's my liquidity. And there's nothing to make it overcomplicated. There's just no reason, because it's all, if you can just understand market structure, higher highs and higher lows, trend, consolidation, bullish sentiment, bearish sentiment, bro, that's really all you need. There's nothing much until you make your own strategy, your own way of finding the market, and seeing it in your own, and kind of building up an edge in your own way. So I think that's pretty much it. It's like higher highs, higher lows. I think that's pretty much how I see everything in this market, you know? Like, support and resistance, okay. Just imagine higher highs and higher lows are forming. Like this. Or let's make it easier. Higher highs, higher low, higher high. Okay. This is a resistance because it formed a higher low. And then if we proceed to break this high, this is a resistance, right? And now we can expect it, if it's really a bullish sentiment, we can expect it to go back down for a pullback and then start breaking it again. Okay? We pretty much, the best entries are after the pullback, or right before, like after the pullback and then the continuation. So these are the best entries. It's finding a pullback after a resistance is broken, and then a pullback, and then your entry right here. Because now you know that you're bullish, and now you know that you're just continuing to the upside, and then aim for your liquidity right here, because this is the previous high that was formed, and now you can aim for a 1 to 4, let's say. And that's the same thing for a bearish support. higher low, lower low, breaking a low right here. This is our support because it's a low and it just breaks. And then once it pretty much does a pullback, the best entries are in the continuation. So after the pullback, this is the entry you can have right here. So we're still following the trend. The trend is your friend. You know what I mean? And you guys probably heard that so many times, and it's so true, because if you can't find a trend, well then you're probably like if you're doing just reversals all the time, I think you don't really make as much money as people who just wait for the trend. So you want to wait for the trend and trade the trend. For my strategy, it looks like a reversal, but on a higher time frame, we are pretty much following a trend. Because the thing is, like London session, like New York session, it's always the big move. So that means if it's one of the big moves, which means it controls the market. Big moves controls the market. Those are the big money. So you see how like these are the big moves right here? Boom. Boom. I'm pretty sure these are New York session. You see? Boom, New York session. New York session. New York session. You see? That's why New York session is pretty much the trend, because what happened on what happens on London session is just like pretty much an accumulation or consolidation, and then it gets liquidated, right? And then New York session is like pretty much a true move, right? For ICT people, it's a distribution. That's what New York session is. It's the big move, right? And we're seeing it out here. Like if we can look at the 1 hour time frame, what are we seeing here? Higher high, higher low. We got it's lower low, lower high. We got another lower low over here. And look what happened. We have a resistance over here. It broke. We can extend that over here. And what happened when it went back and pulled back? We have a lower low, lower high, lower low. We got a little bit of consolidation, and then a pullback. And then what happened over here? This pretty much can be your indication to look for a continuation trade. Look at that. That's a 1 to 4. You know what I mean? So having this basic concept and just using higher time frame, yo, you can make a trade like that. Literally. You know what I mean? Aim for the last low for your liquidity. Yo, you can, this is pretty much your trade right here. That's it. There's no need to overcomplicate this. Right? Over here. Higher high. Higher low. Higher high. Look what happened. What up? This resistance got broken, and then it went back over here. It went back and touched that and retest that. Bro, you can make money off this. Where's your next liquidity? Your high. Boom. Yo, that's a 1 to 2 trade. Right? higher high, higher low, support and resistance. It's that easy, bro. But if you're scalping, it's pretty much the same thing. If you're scalping, you know what I mean. Obviously, there's gonna be entries that you must know and confirm it first before you actually trade it, right? So this is how I pretty much understand the market. It's just higher highs, higher low, and literally connecting higher highs and higher lows as my support and resistance, and then that can be made as my key level and my liquidity, basically. So all of this is building up bias for me to take a trade and see where I'm going, or see what I'm looking for, whether it's short or long throughout the day. So having this bias and having knowledge in market structure, bro, it helps out a lot, because you actually know where the market is moving. You know where it's going. You know what I mean? Once it breaks a high and once it pulls back, bro, like it breaks another high or it breaks that key level, you pretty much know where it's gonna go, right? So it's that easy. You know, make your higher lows as your liquidity and support and resistance. See how much you can kind of build up your own edge upon that. And I'm not gonna address too much information because it might get confusing. But bro, just practice this higher highs and higher lows and connect that as your support and resistance. Watch how you can kind of simplify the market in your own way, and see how you can see how it changes your view and your perspective. All right, so thank you guys for watching. Hope you guys learned something. It might be confusing, but hope you guys learned something. Thank you guys very much. Till the next video. Peace out.